Hi guys, haven't spoken to you guys in like what, 6 days, almost 7. It's been a while. The markets has made a big push, as you can see on gold. I recently took buys. It was like Wednesday. Today's Friday. Yeah, today's Friday. I took buys on Wednesday. I'm gonna break down that. Obviously, I was able to make $2.8 million off of that one, and then Monday. That was Wednesday. Monday, I made around like 600K off the first initial push. So I think this week has been good. Closing right around like 3 point, what is that? 3.6, 3 point, let me see. Yeah, about 3.6, 3.6. But with all that being said, I hope you guys are having an amazing day. Haven't spoken to you guys in a while. A little bit to talk about. Just overall, like for the past couple of days, I have been thinking more and more of like the route that I'm going, especially for this year. This year has been really, really good. I kind of turned up the heat previously in like June, like May going into June, right after we did the tour. Also as well for the tour for the people in Europe. I'm still doing the tour, just handling a couple family things. But like I said, if you follow me on Instagram at Trades by Sai, you'll be able to catch all the updates and everything. I'll post it on there, and then I'll also make one of those like Instagram channels too as well for just events. So then I'll post all the event details in that too as well. So all you got to do to catch up and be at the tours and be at the events, the free events that I do, is just follow me on Instagram and just, you know, stay up to date with my Instagram. But yeah, I mean, the past couple of days has been like, since the last time I talked to you guys, I think I was in Monaco. And since then, I think I just truly was digging deep into where I want to be in the next few years. So I've been rearranging of what I want to do at life. Overall, just got into crypto. Even though I withdraw through crypto, I never really keep my money sitting in crypto. But recently, I've had a change of heart, a change of heart. So I've actually put pretty much. I put a good amount of capital in crypto in the previous like 48 hours, as much as I could in the 48 hours, roughly around like 75% of my, I guess you could say, entire net worth into crypto. And then also as well, getting into watches as well. I think that will be my next investment. Those are going to be my two investments for the time being. Those are two things that I enjoy, or I would love to get into it so I can enjoy it. Those are things I like. But like, other than that, I think the biggest thing is, for me, is like, I need to start getting more into building my passive income more. Like I really need to, like I have a lot of active income and I just take it for what it is. I take the trades and then I'm making money, and that's how I kind of, just, go about my daily life. But I feel like now it's time for me, since I've already have the active income and it's well sustainable. I have active income. I should be putting it now into passive income. I think a lot of people get it kind of misconstrued. They feel like as a beginner, they should be focusing on passive income, but that's never the goal. You're always supposed to make sure you have active income, so that way then you can pour into your passive incomes or your other investments and savings or whatever the case might be. It's good to save in the beginning, but to be honest, bro, like in the beginning, it's only good to save if you're gonna use that money and put it all into like one thing, and then, try to make. So basically what I did was I saved only to take my savings and put it into trading, because you never want to trade with active capital, because that's normally the active capital you have is normally the capital that you have to use for like bills, driving to work, just like random miscellaneous things that can happen in life. That's normally what you use the active income for. So you never really want to use too much of that. You want to be able to, so basically, let's say if you make, $200 a day, or like, let's say if you make $600 a week, that's your active income. You don't want to be trading with that, because then you still got bills to pay, $2,000 a month, $1,000 a month on rent and car insurance and car notes and all this and that. So you don't really want to, but you want to penny pinch off of that. Try to penny pinch, even try to pick up a second job. Picking up a second job is actually depending on what your situation is, picking up a second job or another like freelance or like any type of thing the way you can just like make some extra capital is always helpful, because then you can always use one job for the bills and then another job to save up as much as possible. If you're running through 2-3 different jobs and you're still not having a good amount of money left over, you honestly need to like, organize your life a little bit. I don't know how everybody's living, but I know from my standpoint, I'm more speaking towards the younger crowd, because I know, the older people probably have kids and this and that. So I understand, but more for the younger crowd, especially if you're like 18, 17, going into trading, or 19, 20, 21. There's no way you should be working 2 jobs and blowing all your money. There's just no way. There's just no way. There's no way. I don't want to hear it. I don't want to hear it. And if you feel like you have to sacrifice something, you have to sacrifice it. A lot of people have to understand, like, you have to tell your significant other, your mom, your dad, your somebody, that you're trying to build the skill. And once again, this is coming from a standpoint of like saying like you're trading on the side, you're trading demo, you're trading, just practicing on the side until you overall feel like you got it. And then you use that capital. In the beginning, you can use the money, spend it, whatever you want to do, but try to save some to the side, and then you trade demo, and then 2 months go by and you feel like, okay, I'm ready to start my live. Then you should have a little bit of saved income to the side, take that and then trade with it. And then from there, you want to make sacrifices, be like, hey, I don't, like, I need something to fall back on just in case I lose all this money, or whatever the case might be. But it's always good to just stay away from trading your active income, put some money to the side. Once you feel like your understanding of trading is way higher than it was, then you take that capital and then you trade it. Make some sacrifices to save up money is basically what I'm saying. Save up money. Once you feel like you understand trading, then you go in. That's something I had to learn. That was the biggest thing for me, because back then when I was first starting trading, remember, I started trading, really 2 reasons I started trading. I think I told this like so many times. One, my mom was a single mom. So she was just a single mother, and she was taking care of me, my brother, and my sister. So there wasn't like, taking care of 3 kids. This is why I kind of understand taking care of 3 kids was a little bit hard for her. So as a son, I was like, okay, I got to get up and go work. So then I would go work, but also would look at trading and be like, oh snap, trading can get me to give my mom everything she needs so she doesn't have to stress anymore. So then I started taking all the money I would bring in, the money that I was supposed to, help my mom with the bills with. Instead of helping my mom with the bills, I used to just trade with it and then lose it all because I didn't know what I was doing. So then all in all, it just caused a battle between me and my mom, because it was like, you're trading, you're gambling, get a real job, or like get a job that, pays higher. If you want to make more money, get a job that pays higher. But I'm like, I feel like I can learn this skill, mom. So like, trust me. So then I was like, that's not going to work with, like, I was trying to figure out how I was going to make it work so I can use, because you need money to trade. Point blank, period. You need money to trade. You cannot, I'm tired of seeing these people trying to run up these $500, or not $500, these $50 account, $100 account, $200 accounts. It's possible, but don't stress yourself out. Please don't stress yourself out. Literally start. I'm gonna just explain my story. You take the notes from it. What I did was, I had active income. One job paid $600 in a week, or it was like every 2 weeks or something like that. It was like a week. And it was like every 2 weeks for that one job. And then the other job that I got ended up paying like $600 every single week. We got paid every single week. So I took one job and used that money for helping my mom. And then I took the other job to just save to the side. Obviously spend a little bit of miscellaneous things here and there, but it was really to just save money to the side. I started trading, and looking at the markets, like practicing with just like overall using my eyes, putting the position tool on TradingView and just like, okay, I'm getting in this setup, okay, I like it. Boom, it hits, it doesn't hit, it hits, it doesn't hit, it hits, okay, I feel good, I feel comfortable, I feel like I know what I'm doing, let me step into the market. Then I took the 3,000 I had saved up, I put that into a trading account, and I said, okay, $3,000 in the account. All I need to do to get out of my job is make $100 a day. $100 per trade, probably 3 to 4 trades a week. So then, I'm still working, by the way. I'm still going to work. This is the biggest thing, but I want you guys to just listen to the story. I'm still going to work. I'm still trading. 9 o'clock, 9:30, New York session, but I'm at work. I go to work at like 7. Work starts at 7 a.m., but I wake up at 4 a.m. 4 a.m. is when the pre-market opened for stocks at the time, because I used to trade stocks. And from there, I'm looking for basically what are my setups for the day, what are my trades for the day, what kind of stocks, do we have news, what's going on for the day. I need to scope out what today could possibly be, right? So then when I do that, I obviously get dressed for work, go for a little run, come back, take a shower, get dressed for work. And then when that happens, the bus came at like right around like 5:30 every morning. Sometimes I would take the bus. If I was penny pinching, I would just walk, which was like a 2-hour walk. But remember, work starts at 7 o'clock. So it's whatever I was feeling that day. If I want to take the 5 o'clock bus, I can. If I want to walk, I'll still make it before 7. I'll get there roughly around like 6:50, somewhere around that time, because headphones in, walking pretty fast. With that being said, I'm still going to work. When I wake up in the morning, 4 o'clock in the morning, this was very important too. I set alerts. I still do alerts to this day. Nothing changed. Like, I still do alerts to this day, because that has been my biggest savior out of everything in trading, is setting alerts. Because when I set alerts, I don't have to stare at my phone. I don't have to stare at my computer anymore. I can just like wait for my alert to hit and then make the decision, which obviously caused like a lot of like stress-free trades in my life, because like I'm not stressing like where's price now. If it didn't hit my alert, price is not where I want it to be. So all in all, I would trade throughout the day or trade whenever my alerts hit, and then just if the trade hits, boom, we did good today. If the trade didn't hit, I would wait till I get off work or whenever I go on break, see why the trade didn't hit, look at it, okay, let me do this next time. Okay, I should have did that next time. Boom, boom, boom. Boom. That's how I used to do it. And then eventually I started getting consistent. So now when I'm getting consistent, I'm like, okay, boom, $100 here. Boom, $200 here. I'm like, oh snap. Because realistically, I'm not gonna hold you. You can say you're gonna do $100 a day, or you can say you do $100 per trade, but there are some days where you're just gonna go over that limit. There's some days in the market where you're gonna have a really good day. You're not always gonna hit 100 on point. Some days you might get $50 out of the market. Some days you might get 200. So don't always keep that in the back of your mind. Not every day is gonna be your exact target. Sometimes it can go way over, sometimes it can go way under. Take what the market gets you. As long as you're in a good move, a good play, take it. Just take it, right? So then from there, it was just really just being consistent. I felt really good. I started making some decent money. I got my account up to 10K. Once I got my account up to 10K, it was really just scaling from there. The way that I scaled was really just down to like, for me, it's down to numbers. Like, I think more of numbers. Most people think in percentages. Like, percentages kind of like messed me up, because I really couldn't I didn't have time for percentages. I'm not gonna lie. I didn't have time for it. So when I had 10K, I was risking right around like 1,000 to 1.5K on pretty much every trade from there. And then I had some good penny stocks that was coming in. I think it was one that was like HEX. We had CEI, which was good. We had DWAC. DWAC took me from 100K to 400K, which was really good. But the ones, like, I can't even remember the ones that took me from that 10K all the way up to like 50 to 100K. I know like a couple. I'm not gonna lie. I wish I could remember all of them, but we definitely did have a couple penny stocks back then that were really good. And sometimes they would even get delisted because some of them was just like pump and dumps. But that's another story. But once I got up to like 100K, and then DWAC came out, which was Donald Trump stock, I was able to put pretty much all my income, or all my portfolio, that's what they would call it, portfolio, all into the account. And I would just be like, okay, this one trade, I feel good about it because it's Trump. It's fucking Trump. It's Trump. It's Trump. Like, are we tweaking? It's Trump. It's Trump. It's gonna go up regardless. It's Trump. So then I'm like, okay, bet. I went all in on that, and I was like, okay, I'm willing to lose it all. Like, that's one thing about me. Like, I know, I was still working. I had 100K in my account the whole time, and I'm going to work, clocking in both jobs. But by this time, I was just like, bro, like, if I lose this 100K, like, I believed in it so much. I believed in my analysis so much that I was just like, this looks good. This is a good play. I'm going to take it. This looks good. This is a supportive claim. It's by Donald Trump. I see that it has bottomed out right here. It has a support. Boom, boom, boom. I'm looking at it. The market opens, and I'm going to take it. I felt really good about it, so why not take it? So then from there, I was just really just like, okay, I'm gonna just go all in and see what happens. If I lose it all, we can just start from ground zero again. But this trade feels really good for me. I'm gonna take it. I'm gonna put my money where my mouth is. Obviously, there was gonna be a stop loss. I wasn't gonna just let the whole 100K go around, but I'm gonna put the whole 100K on the line. So that means 100K worth of shares. That doesn't mean I'm risking the whole 100K. I can close when it drop down to like 50K or 40K, whatever the case might be. But I'm putting 100K into it worth of shares, right? So then got crazy. It went up from $10 all the way to, I think the top it got to was like $175. And then from there, it was just like dang, like, I taught myself, I was like, bro, if I feel good about something, I'm just gonna put my money where my mouth is. It doesn't mean full margin, but if I really feel good, and that's how even now, like, my risk management is always like 10% here or 15% here. Most of the time it's 10%, and I'm looking for that 1 to 4 to make that 40% gain, 50% gain. And that's why you see all these big numbers, because I feel comfortable with the setup that I'm getting in. So I'm gonna put my money on the line, because I'm not gonna just sit here and pretend like I don't, I'm not seeing what I'm seeing. Like, if I'm seeing buys, then I'm gonna stick with that. I'm gonna go with that. Like, that's what I'm gonna go for. Like, I'm not just gonna, oh, maybe it could sell. Like, oh fuck, like, what if this happens? Like, of course you're not always gonna be right, but why get on a chart? Why get on a chart and penny pinch yourself on your trade? Why penny pinch yourself on your trade? Once again, I was already comfortable with the strategy that I had. That's another thing. Like, you have to make sure that what you're doing is actually the right thing and it can be consistent. That's step one. Make sure whatever you're doing is consistent enough for you to even have this mindset, for you to be like, okay, I'm gonna, like, I seen my strategy work time and time again. Let's put it to the test this time. Let me put my money where my mouth is this time, right? And that's normally how I trade. And I do 10% risk. 10% risk on the account. 1 to 4s is what I normally try to reach for. I'm a swing trader, by the way, for the people that don't know. I swing trade most of the times. Like, these previous months, I've been kind of day trading, intraday trading, but I'm pretty versatile when it comes to things. Like, really, I'm really versatile when it comes to trading in general. I just can't scalp. I think that's my hardest thing. I just can't do the lower time frames without the higher time frame confluence. Yeah, I just can't do it. But other than that, like, in the beginning, you really need to save up your capital until you feel comfortable. All that I just said is really to just get you to understand that once you feel like you've got it and you understand what you're doing and you understand what you're looking for, Then you take that saved money that you have and you go all in, not full margin. That's not what I'm saying. But I'm saying you say, fuck it. I'm going to take this money that I have saved up because I feel like I know what I'm doing, and I'm going to put my skills to the test. If and this is after you feel like you've already, and this is after you not even feel like, I'm gonna stop using that word. When you've seen that what you're doing works time and time again, then you take all that money and then you're like, okay, I'm ready. And then you put yourself to the test. One thing you're gonna learn for sure is your emotions. That is the biggest thing. And I want you to go into it with ease, because you're gonna have so many emotions. You're gonna think so many different things. You're gonna be going nuts because you're trading your actual capital, but it's not gonna be that bad because it's your saved money. As long as you're still going to work, still making some money on the side, you're not gonna feel that, stress, right? And if it takes a couple months, so what? Think about it this way. I'm gonna end it right here. I'm gonna think about it this way, right? Think about it. If you know, if you spend 6 months doing something or 6 months building something, if you know that 6 months, after that 6 months, you're gonna be, 6-figure earner or 7-figure earner, why wouldn't you wait that 6 months? Why can't you wait that 6 months? If you know in 6 to 12 months, 24, whatever, 6 to 12 months, you know you're gonna be where you want to be, why are you being so impatient? Why are you being like literally think about that. Just pause the video and just ask yourself that. If you know that you do the right things, you go in the right path, you stay focused, you stay disciplined. If you know, if you do all this in 6 months, if you do it every single day, if you stay disciplined, stay focused every single day for 6 months, and you know that's going to lead you into a better position than where you're at now, why can't you wait for that? It's just 6 months. All right, chat. So, today's Friday. Haven't traded since Wednesday. Today is pretty good. Overall, this week has been pretty easy and the market has been pretty bullish. So I haven't been, too stressed out about, the current market moves after I closed my trade. I could have held, could have made more money. It is what it is. I don't really care. Uh, so we're gonna break down these trades. Overall, like when it comes to price action, I want you guys to really, really, really understand, like, it's not that hard. All you got to do is follow what price is giving you. Higher highs, higher lows are most likely giving uptrend movements. Lower highs, lower lows are always giving downtrend movements. So all I did from this standpoint and this angle, so you see my entry is here. Prior to it, I had a resistance here. So if we was to start off price here, this would be our resistance level. This is showing us that sellers are in control, but it's only showing us sellers are in control from this point to this point. And then buyers kick back into the market. Boom. Buyers come in, they end up breaking out of this level. This is the level that buyers hold above until they get to here. So buyers are in control from here to here, right? That's all you need to know. Keep it very simple, right? Sellers are in control from this level down to this level. Once they get to this level, buyers can kick back into the market and push price higher. Buyers kick from right here, buyers kick in. But from right here, you know that they're really there. They're in control. So from here, it can be mixed. That's why you see candles going up, some getting rejected, some going up, some going down. That's why you see, because the sellers are still trying to fight here. So sellers are fighting right around this level. So let's go here. Boom. Sellers are fighting here until they get to here. And then buyers kick in. So now it's sellers and buyers, which is why we wait for that indication, right? So then what the indication does is the indication lets us know that above the blue line, buyers have control all the way until here. Boom. So buyers are in control from that blue line to the next blue line. Then we wait for the correction. The correction normally gives us that higher low that we're looking for. Since we're in this uptrend, we need a higher low. Why do we need a higher low? Okay. We need a higher low because if we get more supports, we know that price is, pushing off of that support with more momentum, more buying pressure. So if the supports are getting higher, this is obviously letting us know that price is getting bullish because this is that last level of support. So we're just going to draw this. This is that last level of support that buyers came in. So this means buyers are moving in. So from this level, buyers are coming all the way up to here. And then there's a pullback. So there's a pullback. And then buyers are pushing in heavier right here, which is showing us that buyers are getting higher and higher. Same way with sales too as well. So from this angle, if price sold off from right here, that means this level, sellers are pushing from this level right here. But that's not a good sign for sellers because sellers are getting pushed back. It's almost like a game of tug of war. It's literally a game of tug of war. Sellers are getting pushed back because buyers are kicking in. Buyers are coming stronger and stronger, and then sellers try to fight back. Sellers get to a certain point where they, make it past that, the flag gets passed onto the buyer side. So they're pushing into buyer's territory. And then buyers are like, hell no, let's get stronger, and pushes back above this level. So all in all I did was I waited for price to get back above this blue line. And then we scale into the 15-minute time frame. Once we scale into the 15-minute time frame, this is really the easiest part. Above this blue line, all I'm doing is making sure that everything else aligns. 1 hour time frame is bullish above the blue line. Price is above the blue line. Let me scale into the 15. The 15 had a previous high right here. Level of support. Indication. There was a correction in the market. Price came back above this level where we seen bullish potential before on the 15. I'm going to place a buy. That's all you need. You don't need anything else. Like, you don't need anything else. You're overcomplicating it for what? I don't know why you're overcomplicating it. It's not that hard. All I did was I drew a level. So even here, right? Let's say price now, right? I draw a level here. Boom. This is my indication. I let price correct. When price corrects, once it's back above this blue line, I jump to the 15 and I make sure something tells me this is bullish. Normally it's a higher low or it's a break of a swing high on the 15. It can be either one of those things. It doesn't matter. Something needs to tell you that price is bullish. You just need something. Something should show that it's bullish above that blue line. The 1 hour is already giving you good confirmation, but if you really need the more confirmation, that 15-minute is going to give you what you need. Normally I jump down to the 15. If the 1 hour is bullish, most likely the 15-minute is bullish because of that. The 15-minute comes into the 1 hour. So you need that 15-minute candles to go bullish before you start seeing the big green candles on the 1 hour time frame. So once again, with all this being said, right? You don't need much. All you're doing is marking your swing highs and swing lows on the 1 hour time frame. And then once price gives you an indication, you wait for the correction and then take the continuation back above that blue area. So that swing high that you mark, your buy entry should always come from a swing high. Your sell entry should always come from price breaking a swing low. Breaking a swing low, sell. Breaking a swing high, buy. That's it. Literally nothing else. If it's breaking a swing high, already got your indications that price above this level, already got your higher lows set, your higher levels of support, buy. Keep it simple. Super simple. Trade in session, everything's going to be perfect for you. You're not going to be right all the time, but you're going to be right. You're going to be right 92% of the time.